Today is Sunday, tomorrow is Monday. That means it is time to get into a price prediction for AMC stock. There's a lot of moving parts right now, and there's a very strong bullish thesis for AMC. But what does that mean for this stock in the next week ahead? Ladies and gentlemen, that's what we must get into. I hope you are excited. Number one, I hope you guys had a great weekend. Number two, and number three, I hope you are ready to dive into this video. So sit back, relax, enjoy whatever you are drinking, and let's get into, or eating. Eating sounds pretty good. Don't get me started on food. You guys know how it is in the live streams, baby. Let's get into it, guys. So first things first, AMC stock last week, it was pretty flat, okay? You bobbed around in this range. A key thing that I was watching last week is the 50-day moving average. You were up, you were down. This looked like a real fighting ground for shorts and longs, right? For bulls and bears on AMC. Something pretty good happened, though, on Friday. The 50-day moving average at $5.05 per share. You closed under that in regular trading at $5.03 per share. And you shot up above that in after hours to $5.07 per share. That's very symbolic of the bulls taking over, especially when the volume is more true, and that is in after hours. Algorithms are not active in after hours, or not active as much, okay? They're still there. They're just not as active, right? Because the markets aren't as active. So you can see a little bit more or less the actual trading that is taking place. And what you've seen in after hours was an almost 1% rally in AMC stock. That tells me the underlying stock of AMC is probably more bullish than it looks like. On top of that, I think this will be easy to understand for everyone out there. Options, unless they're on the S&P 500, the SPY, or the QQQ, or another index fund, you cannot trade single stock options after hours. Something like AMC, institutions cannot buy options on AMC in after hours on the lit markets. So it doesn't affect AMC share price. Well, what we have seen recently is shorts and hedge funds. They're not shorting shares of AMC as much anymore. The tactic has changed. They are now buying deep in the money calls, basically a synthetic short position on AMC. I call it synthetic because instead of the hedge funds shorting shares, right, they're buying the options, which forces the market makers to short the shares, which gives the hedge funds short exposure. It's basically the same thing as shorting 100 shares per every option they buy. But that short interest will not be reflected as short interest, okay? Because market makers, they're very fluid. They go in and out of positions. They are not required to report the amount of shares that they have sold short. That's a fact. Look it up. So what you're seeing right now is actually a lot of shorting on AMC, but it's by the market makers now. It's not as much by the hedge funds. So it's not being reported to us in these official short interest reports. So when you sit here and see AMC short interest at 25%, but you also factor in all of these videos day in, day out that I'm reporting to you guys, the $10, the $13 puts being bought in single trades worth millions of dollars. Some days, the shorting pressure from market makers based off of these large option trades have been in the 2 to 5 million share range. Some days it's almost 50% of the total volume for AMC. So what we've seen in after hours on Friday and what we continue to see in after hours most days are that the bulls are really in control once the volume does come back in, and once you don't see these multi-million dollar bearish bets placed on AMC stock. The fact that you closed above that 50-day moving average, also a very good sign. Okay. Now, the demand zone. This is something I touched on in one of the last videos as well. That demand zone is in between $5 and $4.80 per share. A major level of support, but not only that, that is the previous low is under that demand zone, $4.64 per share. So you've touched down here about 480 a couple times now. Really, these 2 days right here, May 16th, the low was $4.94 per share. The next day, the low was $4.87 per share. Even on Thursday, on May 18th, the low was $4.99 per share. Even going back here, the low was $5.03 per share on May 15th. You can see right at $5 per share or slightly under $5 per share is very much a demand zone, okay? So that is a positive sign that we're breaching this level some days, ripping up from those lows, and really staying above that zone. The last thing you want to see is AMC stocks start to plummet, to 480, 470, 460 and not get a bounce once you drop there. That's where the demand zone is getting eaten up, and that's where you're going to see a lower demand zone. The demand zone being where it is now and the share price of AMC being close to that demand zone really gives us a make it or break it kind of next couple of days, okay? If the stock does fall under that demand zone, like I just said, we're going to have some problems. But if you bounce from here, that demand zone stays intact and that demand zone can start to move up. Maybe the demand zone by the end of this week is higher than $4.80 to $5 per share. Maybe you're more or less in that $5.50 range or $6 range if things do go right. Now, what I want to talk about here next is what could go right, what could go wrong. And number one, it's the debt ceiling. Who knows what's going to happen? McCarthy and Biden, there was a lack of progress on Friday. That's what sent the markets down. It wasn't Powell. It wasn't as much Janet Yellen as it was the negative debt ceiling comments. The markets have been rallying based off of the debt ceiling, and really the market's pricing in that the debt ceiling will get fixed. So that's a big negative that potentially is weighing over this market. If you do see, coming tonight, because they're meeting tonight, and then they will also meet on Monday. If you get negative headlines, it's going to negatively affect the markets. Now, this is something that could have a huge impact on the markets. Could cause markets to fall 50% if a deal is not done. But the likelihood of that happening is virtually zero. So I don't expect a lot of huge downside from this. 5%. Could the indexes fall off of this? Sure. Is that going to cause a collateral crisis? Probably not. That's why I'm trying to look ahead, okay? You're going to have AI-based earnings this week. This is going to be the AI week. And typically it is. NVIDIA and these AI companies tend to report later in the earnings cycle. And that's what you're going to get really this week, Tuesday and after hours. I talked about this in the last video, but you're going to get Palo Alto, cybersecurity, right? Think AI. They're probably going to mention AI quite a few times, and a couple other smaller companies. But Wednesday, Analog Devices in pre-market. And then you got NVIDIA and Snowflake in after hours. That's going to be a huge day. It's going to show us these gains that you've seen in NVIDIA and these AI companies, Microsoft, Google, the largest companies in the world. Are these gains going to be able to hold up? Is this just a lot of hopium, or are revenue numbers going to come in sooner than what people expect, what analysts expect? Are these valuations justified? NVIDIA with a stupid high PE. Nobody's buying this based off of the current valuations. They're buying this based off of revenues and earnings really ramping up over the next couple of years. This could be a buy the rumor, sell the news kind of event. And like I talked about in the last video, a lot of bubbles we've seen in history, even whether it be crypto. Crypto never got to be a larger market cap than where Apple currently is today. And that's just one name for an example. So even though someone would say crypto is a big bubble, or the, devil's lettuce sector in the past, or biopharma, or this sector and that sector, nothing compares to AI and what we're seeing on a dollar for dollar market cap increase basis. Those bubbles affected sectors that really don't matter to the markets as a whole, right? Crypto doesn't matter in the grand scope of the S&P 500. Sure, some companies are invested in it, some hold it on their balance sheets, but by and large, that's a very small amount of capital out there of total market cap, right? So AI is very much different. This certain industry or bubble or whatever you want to call it, AI has affected the largest companies. So the collateral or capital, I should say, is really concentrated in those companies. If you do see those companies' values fall, if Nvidia does fall 15, 20% after their earnings, what do you think that's going to do for Microsoft or Google or for Facebook or for Tesla or for any other company, AMD, that has been running based off of AI? It's not like these businesses are growing anymore. They're all down year over year. They had better years in 2022 than they are now. Okay? Just put that into context and fill in the blanks here. That means AI has been the driver of this market. If those stocks, long story short, start to fall, it puts pressure on liquidity, puts pressure on capital, because when this thing does burst, how low are stocks going to go? They've rallied to new 52-week highs in most cases. Not Apple. Well, Apple, I think, is a 52-week high, not an all-time high. Microsoft, 52-week high. Nvidia, 52-week high. Facebook, 52. They all, basically all of them. I believe Google is not, and I believe Amazon is not, but they're going to be close as well. So when you think about that, how are you going to feel if you're holding these stocks as collateral and they start to fall? Who knows how much they could fall? That's going to cause a lot of, I guess, panic. Some liquidity is going to start to dry up. Some of that accessible capital right now, based off of these valuations, is going to be less after Nvidia earnings, or at least it could be if my thesis is correct and AI stocks take a leg down, because whether you think it's the future or not, whether you think it's going to be bigger than the iPhone, like some experts believe, a $16 trillion market cap by 2030, we're not there yet. Okay. So eventually this will happen. Does it happen this week? Does it start? Possibly. And like I said, that could be on Wednesday. Now, you're going to get other economic data as well, but nothing's going to be as important as that. Let me just go ahead and get off the Discord. It looks like that is going absolutely crazy right now. If you guys want to come join it, link down below in the description of this video. Come be a part of that group. But as far as what we have for this week, Fed Bullard speaks 8:30 in the morning on Monday. Fed Harkin, 10:50. Fed Barkin, Fed Bostic at 10:50 as well. 3-month and 6-month bond auctions come in at 11:30 on Monday. On Tuesday, you're going to get Fed Logan speaking at 9 p.m. New home sales at 10 a.m. Richmond Fed Services Index coming in at 10 a.m. as well on Tuesday, and a 2-year bond auction as well. Wednesday, you're going to get the 30-year mortgage rate, at 7 o'clock in the morning on Wednesday. Then you're going to get the FOMC minutes. This is a transcript of the last Fed meeting. Typically, they don't give you the biggest long-lasting moves in the markets. Like, this doesn't typically turn a green day to a massive red day. It's usually not huge details or huge changes. The last couple FOMC minutes have given you a bigger response, so I think it's certainly possible if there's commentary that is kind of different than what we, are expecting to hear. It's basically a transcript of the last Fed meeting. Now, Thursday, you're going to get GDP growth rate, quarter over quarter, second estimate. You're going to get, as well as that, just second estimates for GDP for the first quarter. So that could, if that moves around, that could affect the markets, but it's got to move quite a bit. Initial jobless claims coming in at 8:30 in the morning as well on Thursday. Bond auctions coming out later in the afternoon around 11:30 to 1 p.m. You're going to get quite a few bond auctions. Fed Collins speaks at 10:30, as well as I believe you get PCE as well that does come out. Yeah, it's GDP and PCE quarter over quarter estimates as well. And then on Friday, that's going to be the big day as far as economic data, 8:30 in the morning, personal spending month over month, personal income month over month, durable goods orders month over month, and core PCE month over month. All of that coming in at 8:30 in the morning. So Thursday, really Tuesday and Wednesday, that's going to be, well, I should start with Monday and Tuesday are probably going to be more so headlines along the lines of the debt ceiling. That's probably what the markets are going to react to. And then middle of the week, really around Wednesday, it's going to be about AI earnings, about NVIDIA earnings, going to be massive. By the end of the week, it's going to be economic data. So depending how these things play out could definitely throw a wrench in what could happen with AMC. But from what I see right now for this week, if things are really good, you could hit $6 per share. I expect that to be another resistance level. And I think over the next couple of weeks, you could really break out from that. But we're down here at $5 per share. I want to see AMC stock break above $5.50 per share. That would put the stock about right here, about halfway through this previous rally that we just seen in May, when AMC went from $4.50 to $6 per share. So that's what I think is going to happen, around $5.50 to $6 per share. I'm not going to sit here and forecast we go much higher than that yet, because I don't know how this collateral crisis will play out. If it does play out, positively, I would expect, and meaning the markets fall and liquidity starts to dry up and AMC stock gets a boost off of that, then I would expect you could go even higher than that. And the next stop would be the 200-day moving average, $6.62 per share. If all things go good, that's where I really would expect the peak of this week to be, around that 200-day moving average. You will find resistance at that level. Now, on any downside, guys, this demand zone, as long as it stays intact, $5 to $4.80, you're going to stay in that demand zone. Hopefully you stay above that. And why I'm sitting here and really forecasting the stock to bounce to $5.50 or even $6 per share is because you've been in this downtrend for a while. We've started to base out. Now you should start to see that recovery effect take a hold of AMC stock, guys. So that is going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.